Hello, everyone, and welcome to our presentation for MAC 1008 on financial reporting and financial statement analysis. Today, our group will guide you through the fundamental principles of financial statements, covering their meaning, key objectives, presentation standards, and the core components that make up a complete set of financial reports. Let's dive in. To kick things off, let's look at what financial statements actually are and why they matter. Definition: financial statements are formal, standardized reports designed to provide key financial information to various users. They reflect an organization's financial position, performance, and cash flows, making it easy to compare results across different reporting periods and against other companies. Primary objectives: the main goal is to deliver clear and structured data to help investors, creditors, and management make sound economic decisions. They also demonstrate how effectively management has stewardship over the company's resources. Core elements: they capture 6 essential components: assets, liabilities, equity, income and expenses, owner contributions and distributions, and cash flows. When preparing financial statements under TAS 1, there are 9 general considerations that every company must follow. Fair presentation and TFRS/TAS basis. Reports must present financial facts accurately and comply fully with accounting standards. Going concern and accrual basis: we assume the business will continue operating into the foreseeable future and record transactions when they occur, not just when cash changes hands. Materiality and aggregation: significant items must be shown separately, while minor items can be grouped together. No offsetting: assets and liabilities, or income and expenses, cannot be netted against each other unless specifically permitted. Frequency, comparison and consistency: statements must be issued at least annually, include comparative figures from the prior year, and maintain consistent formatting over time.
Now, let's discuss what makes up a complete set of financial statements. A full set includes 1. Statement of financial position. 2. Statement of profit or loss and other comprehensive income, OCI. 3. Statement of changes in equity. 4. Statement of cash flows. 5. Notes to the financial statements. 6. Comparative information from the previous period. 7. An opening statement of financial position, if retrospective adjustments occur. Header requirements: every statement must clearly display the company's name, whether it's a separate or consolidated statement, the reporting period, the presentation currency, and the level of rounding used, such as in thousands or millions of baht. Moving on to the statement of financial position, commonly known as the balance sheet. Asterisk core elements: it outlines 22 core line items spanning assets, like cash, receivables, inventory, and PPE, liabilities, like payables and provisions, and equity. Asterisk clarity: material items must be kept distinct, while less significant details should be broken down in the notes rather than cluttering the main statement. Current versus non-current classification: entities must separate assets and liabilities based on the 12-month rule. Items expected to be settled within 12 months are current, while those beyond 12 months are non-current. Asterisk note: deferred tax balances are a key exception and must never be classified as current. 4. Presentation of the statement of financial position. 4.2 Current versus non-current distinctions. Classification principle: entities must present current and non-current assets and liabilities as separate classifications, unless a liquidity-based presentation provides more reliable and relevant information. 12-month rule: regardless of presentation method, entities must disclose amounts expected to be recovered or settled within 12 months, current after 12 months, non-current. Key exception: deferred tax assets and liabilities must never be classified as current.
Next is the statement of profit or loss and other comprehensive income, OC, which measures financial performance. Presentation option: company can present this as a single unified statement or as 2 separate statements. Key components: it breaks down profit or loss, total OC, and total comprehensive income, which is simply profit loss OC.
It also explicitly allocates these totals between the parent company's owners and non-controlling interests. The statement of profit or loss should present each required line item with its amount for the reporting period. OCI categories: items in OCI must be split into 2 groups: those that will not be reclassified to profit or loss in the future, and those that may be reclassified when specific conditions are met. The statement of changes in equity tracks how equity components move over the period. Key disclosures. It highlights total comprehensive income, retrospective adjustments under TAS 8, and a full reconciliation of equity from the beginning to the end of the period. Owner transactions. It clearly isolates transactions with owners, such as capital contributions, share issuances, and dividend distributions, including dividend per share metrics.
Thank you. The statement of cash flows categorizes cash inflows and outflows into three core business activities. 1. Operating activities. Cash generated from the primary, revenue-producing operations of the business. 2. Investing activities. Cash spent on or generated from long-term assets, such as purchasing equipment or property. 3. Financing activities. Cash flows relating to equity capital and debt borrowings. Reporting methods. Operating cash flows can be presented using either the direct method, showing gross cash receipts and payments, or the indirect method, adjusting profit, loss for non-cash transactions.
The notes to the financial statements provide essential context to help users understand the figures. Purpose and contents. They detail the basis of preparation, significant accounting policies, supporting calculations for line items, and disclosures regarding risks or contingent liabilities. Key focus. They explain management's key judgments, assumptions, and reasons behind choosing specific accounting treatments.
Thanks, Speaker 2. Moving to Slide 10, we have the Statement of Profit or Loss and Other Comprehensive Income, or OCI, which measures financial performance. Companies can present this as a single unified statement or as two separate statements. It breaks down profit or loss, total OCI, and total comprehensive income.
In Thailand, financial statements adhere to regulations set by the Federation of Accounting Professions, including TAS, TFRS, TSIC, and TFRIC, and regulations from the Department of Business Development. Closing and group members. Our group members are listed here on the slide. That concludes our presentation.
Thank you.